Instead of thinking about nothing's happening to it, it's not going anywhere. But when you look at it clearly, okay, it's not going anywhere. Now is the time for me to actually stockpile. Now is the time for me to actually add. Now is the time for me to actually build a massive base so that when it goes up over a stretched period of time for the long term, I have already a large amount of volume. Hey guys, so in this video, we're gonna talk about the topic of cost averaging. Is it still relevant? Will it actually help you if it's not just for the stock market, but also for the cryptocurrency market, so that you have clarity on what it's for and you have clarity if it's something that fits you. For those who don't know what cost averaging means, cost averaging is basically you deciding a fixed amount of money to put in to be able to buy a stock, regardless if it's Philippine stocks, US stocks, or a cryptocurrency, putting it on a regular basis, stacking it, and building a base over the long term. So please do remember this. The whole goal of cost averaging is accumulation, and not just accumulation. The whole goal of it is you are an investor. A lot of people use cost averaging in the wrong context, that they are using cost averaging with the goal of trading. Please remember that cost averaging, regardless if it's peso, US dollar, or crypto, it won't work for trading. Trading needs technical analysis. Trading needs timing. Trading needs that you have the ability to pick when a stock is bouncing and not even breaking down. Because if you just buy with the context that, okay, I'll just buy and then I'll just wait for it, then that's investing. You know your goal is to trade, then cost averaging is not the way to go for you. But if your goal is to invest, and then your timeline is for the long term, and then you know how to pick good companies, because people always think also that if I do peso cost averaging and I leave my money for the long term and I build a base and then I accumulate, then I will make money in the stock market or in the crypto market. Please remember that you still need to do your due diligence, regardless of what analysis you are using, fundamental analysis, etc., when selecting. Because if you buy a bad stock, a bad token, a bad coin, and keep on accumulating on that for a long period of time, if it's not fundamentally sound, guess what? Over 5, 10, 15, 20 years, you might be holding onto something that won't have any value, or you might be holding onto something that's at a loss, or you might be holding onto something that won't be existing anymore. It always goes back also that you actually need to study, you actually need to take the time to be able to learn what you're getting into. You actually need to take the time to be able to dissect the information properly. So if you're investing for the long term and plan to use cost averaging, it does not excuse you from the fact that you need to study and you need to filter out and you need to know the fundamentals of what you're getting into. If you're looking at the narrative of what I'm saying, cost averaging is very, very good for people who are long term, who want to accumulate, and who want to pick something that's very resilient through a stretched period of time. If you are doing cost averaging, you're putting a specific amount of money on a regular basis, regardless if it's twice a month, 15, 30 every time you have salary, or once a month. It doesn't matter. What matters is you have an intentional amount of money that you want to put in on a regular basis. It allows you to put a small amount that will become big later on because you continuously put and build a base off of it. I think these are 4 people that, number 1, don't have the discipline to save, don't have the discipline to invest yet, that they need a mechanism to force themselves that, okay, instead of me spending on this, I will take out a certain amount of money and I will buy crypto. I will take out a small amount of money and buy stocks. So that over time, it may seem small, but because of that, it allows you, it gives you a framework that you're also building assets for a long period of time. So if you're a person that loves to spend and you're having a hard time to actually save and invest for the future, do cost averaging. It allows you to remove an amount of money that you can actually put in to save and invest for your future. I think cost averaging is also for people who don't want the nitty-gritty, they don't want to analyze, okay, is this the best time to come in? Or I'm too busy with my work, I'm too busy with my business, I'm too busy with whatever I'm doing. I will just decide, okay, this amount of money is what I want to put in on a regular basis for this stock, regardless of its direction. This will massively work if you're buying something that's massively superior. Things like Bitcoin, Apple, Coke, etc. Then while you're also building, you just let time multiply it for you. You let time compound it for you. You let the goodness of the asset appreciate also over time. I guess mistakes of a lot of people who are investing that, okay, it's too expensive now, I don't want to buy it. When you see something drop, there's something at the back of your head saying, what if it drops further? What if it's down 40% right now, but what if it goes to 60? What if it goes to 70? I might as well wait and preserve my capital. But if you are not that type of person, and if you easily get rattled when it's lower, or you easily get rattled also when it's higher, the temptation to take profits when it's higher is also there. If you are a person doing cost averaging, your goal is not to take out the money unless, number one, your goal has been hit. You would want to take it out because you would want to travel the world. You'd want to take it out because you're already retiring. You'd want to take it out because you want to start a business from that money. Or you want to take it out because your kids are now entering school. Then that's valid. Or the second scenario could be also that the reason why you are holding on to that particular asset, stock, crypto is no longer there. For example, you're buying a certain stock and you're buying it because for the past 12 years, they have been growing massively. Their sales, their income has been going up. Then suddenly, on that year, they started to dip. They started to go down. Then that's also a valid reason for selling. Don't just sell just because it's up. Sell because, number one, your goals are hit, or your strategy, your mechanism based on fundamentals to sell have been hit as well. So in my opinion, those are the things that you need to consider if you want to actually sell. If you're asking the question that if it's up, should you sell, and you don't know what to do, then cost averaging will work for you because it reduces the tension on what you're supposed to do, because you already know that, okay, I just have to put in a regular amount of money. I made so many videos about it, giving you the computations on what will happen when you do peso cost averaging, that you keep on adding. Don't take out the money, and whatever you earn, you reinvest. It becomes powerful because you have to remember this, that when you do peso cost, especially when the stock that you are buying has dividends, then it becomes very interesting because the dividends become bigger as your base becomes bigger. The dividends becomes bigger also as the company gets bigger, the stock price gets bigger, and you get a larger amount of money also in return. And I think that's the beauty of it that not a lot of people are talking about. They always talk about dividends in form of, okay, this is the dividend yield of what I will get for this year. But if you bought the stock 15 years ago, your dividend yield is not the dividend yield this year. Your dividend yield is the dividend yield at the price that you bought it. So if the price that you bought it is very low, and the stock has gone up very high, and they increase their dividends every year, then your yield is something that becomes very interesting. Does cost averaging work? The short answer is yes. The long answer is it depends on what your style is. It depends on if it's something that fits you or not. Have I seen people successful using peso cost averaging, dollar cost averaging, crypto cost averaging? Yes, it does, because it allows them to build a base. Let me give you an example. Bitcoin dropped last May. So when it started to drop, I saw a lot of people, instead of, okay, I'll just try to time and pick everything, pick my slots very well, they decided that, okay, it's down right now, I'll buy. I'll cost average. I'll build a base on it. For those who accumulated at 28, 29, 30, 31, right now they're up. How much more if Bitcoin would continue to go up over the next few years? If you know technical analysis, you've been watching my technical analysis videos, or you've read my book, or you've been to our Stock Smarts seminars, we always talk about ranges, and we always talk about support and resistance. Similar to what's happening to Bitcoin, you can also plot certain stocks or certain cryptos that are in specific ranges. While that's happening, you identify, okay, this certain stock, this certain crypto is moving within this range, within this channel. Then you can actually draw also a support line, because this can be your goal. Plot the chart every time the stock is ranging and very close to the support. It doesn't have to be exactly at the support. As long as it's close to the support, that's when you start adding, accumulating, stockpiling. Then when it starts to move higher, goes to the resistance, you can opt to just wait, taper that cash first. You can put a bit, but smaller than what you're regularly putting, so that you just fulfill your requirement that you are adding. But once it starts to dip once again, the amount that you were not able to put in yet, that's what you start to deploy. That's what you start to add. And then that's when you start to build the base. Now it becomes very interesting, because when you see stocks and cryptos moving at a certain range, when you see them consolidate, when you see them move sideways, you're now thinking, okay, this would be a time for me to be able to build a base. And that's where it becomes very interesting, because instead of thinking about nothing's happening to it, it's not going anywhere. But when you look at it clearly, okay, it's not going anywhere. Now is the time for me to actually stockpile. Now is the time for me to actually add. Now is the time for me to actually build a massive base so that when it goes up over a stretch period of time, for the long term, I have already a large amount of volume. And I'll keep saying this, it will always be about the large amount of number that you put in, that you deploy, to allow you to build a large asset base. Should you use peso cost averaging, if you're a long-term investor that want to accumulate and then the large amount of money is not there yet, you know how to pick something that's very, very superior, and you have the patience not to sell, to reinvest the earnings, to reinvest the dividends, then I think peso cost averaging, dollar cost averaging, crypto cost averaging would be something that would be very, 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 very useful for you as well. There will be people that it doesn't fit them, cost averaging, because they're trading. And well and good, I love trading myself. I love buying and selling. I love using support and resistances. I love moving averages. But I have to realize that there will be a large amount of people that don't need to actually trade because they have other stuff also going on for them. That there will be a large amount of people that will be very, very rich, that will be very, very profitable because they're just very, very consistent. Please remember, you don't need to be flashy to do very, very well in your finances. You don't have to do the highfalutin things, the ones that are very, very popular. It's the slowest things, it's the most boring things in life that will make you rich. And cost averaging is one of them. So I hope you guys got a lot from this, and I hope that this was something that was insightful for all of you. If you want more of this, my name is Marvin Germo. I'm a stock market trader and investor, and I create daily videos about investing. So like, share, subscribe, and smash the bell so you get updated every time I come up with new content about the markets. If you want to join us for our courses, we have a technical and fundamental analysis course happening in the next few months. Links are in the description below. And if you want to grab a copy of my book, check it out also. It's available via Shopee and Lazada. And if you want to trade the US market, the crypto market, and also the Forex markets, we have links down below where you can actually go trade Binance and also XM. So I guess that's it for now. I hope that this is something that's helpful for all of you. This is Marvin Germo, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.